Hey everybody, good evening. Eric here, February 22nd in the evening, early evening East Coast. I wanted to update you on the technical aspect of gold and the gold mining stocks. Don't mind this messy looking chart. I'm going to walk through the important points here, and we're going to take a step back, and I think this is where we can look through a lot of the noise. The day-to-day gold has been pretty choppy. Very stealth-like in its climb, as we can see on this monthly chart. But I'm going to make sure that I can you can follow my arrow and while I'm talking and point out what I'm trying to describe here. Basically, the reason I titled this "Get Ready" is because we are literally on the cusp of the entire game changing for gold, the entire environment, the entire sentiment, and the entire interest in this area would flip right away, very fast, would draw enormous amounts of number one traders that clearly would see a defined breakout and a lot of institutional money that would start to come into gold. And we're right there. And it's been a bit frustrating for people, I know. We've literally had somewhat sideways action since 2013, which is a 5-year period. So this has been a long suffering wait for a lot of you. And I think it's about to pay off in a massive way. I don't know if it's going to be next week, next month, or if it's going to take another quarter or two, but we are coming to some apexes in this arena that are going to resolve themselves, and it's going to be sooner than later. I think it's probably going to be in the next month or two, maybe 3, but we're going to see gold either break down out of its pattern, or we're going to see it break out. And it's going to break out from an area that has been resistance for 5 years. So the general rule is the longer the consolidation, the more powerful the move once a breakout occurs. This is actually basic technical analysis that I'm going to show here. And why do I use it? Because it works. If you don't think the charts are valuable, it's because you don't understand anything about technical analysis. That's usually what we do about anything that we don't quite know. But this is important because you can say all day fundamentally you want to own gold, and you should own gold, and you're bullish on gold, but it's like you can identify what to buy, but when are you going to buy it? And I think the reason that it's very important to look at these things is because of the timing. It's because of also, once we get a breakout of the gold price, you are going to want to deploy money into the space. You're going to want to deploy a good amount of money into the mining stocks, gold, and silver. And the reason for that is because once the trigger is pulled, gold is going to have a very far ways to run. We're talking about, I've got GLD pulled up here. I probably should have pulled up the gold price, but we can talk about it in terms of the denomination and the gold price. Really what we've done is we finally broke through 1300, but the real monster, the real area that we've had a trouble moving through is that 1375 area, which is where the gold bull stopped, the gold rally stopped in its tracks right here in 2016. So this area right here is where we halted after a very violent move up in early 2016, and we've been consolidating since then. So one thing I want to point out, and I pointed this out starting last August, I believe, was the first month, and I believe that was right here, this white candle, followed by September and October. And I mentioned that when you look back, and this is 10 years here, folks, this is a very long-term chart. What we've been doing, and you could actually draw it all the way here, which I've done before, but I just wanted to keep the attention in this area. But you can draw this straight line all the way through here, and then all the way from the top in 2011, straight line down. I mean, if you don't think technical analysis works, then why is it stopping right at the line every single time, both this way and that way? It's not a coincidence. This is basically called a triangle pattern that's occurring. It's very common. And I guess the thing that is not helpful is until it breaks one way or the other, you don't know for sure if it's going to break up or it's going to break down. However, in this particular case, where you're looking at a low here, a higher low here, a higher low here, a higher low here and here, that's bullish. It would put the odds at 75% or greater that the next break is going to be up. That's just the way that this stuff works out in general. Doesn't mean that it's impossible that it could roll over and go lower, but it's less likely, much less likely. So what I had pointed out back in the summer and fall of last year is that once we break out of that top trend line, it's very important. And it actually is technically a breakout already. So we saw it, and I like to see 3 consecutive closes above any of these levels to confirm an actual break in trend. And because this is a monthly chart, we need 3 months above it. We saw the first one in August, the second one in September, barely above it in October, also closed above in November, December, January, and now we're in February. That's plenty more than 3. So we have a breakout, but we also have an issue. And the issue is this line right here, which has continued to be resistance on the chart that has stopped gold in its tracks once, twice, 3 times, 4 times, 5 times, 6 times. This is the 7th go at this level since 2013. And when it goes above it, it will be violent. And when I say violent, you're going to see a spike like this in volume is going to be right here or right here or right here or somewhere in here when it actually happens. My call, even though we don't have 100% odds with this type of a breakout pattern, is I'm absolutely confident gold is going higher. I'm not concerned anywhere near as much that it's going to roll over at this point. The odds are greatly in the favor of the bulls. And so what that means is that once you get through this level, where's the next area of resistance? This is actually when it's 150 on GLD, that's 1600 in the price of gold. Just like 130 would be 130 would be 1400. That would break out there. So this is 150, and this is just a basic technical line from where the previous lows were, and this again is going back very long term. So I would anticipate the first level of real resistance. There will be fluctuations along the way, but once we get through that 1400 number, it's going to go up a couple $100, probably within weeks to a few months. And then from there, after that resistance is broken, the only other spot that we're going to see, which will be heavy resistance, is in the previous 2011 highs of a little over $1,900 an ounce. What I find very interesting is in 2010, when it broke this level, it only took 9 months to get to 1,900 bucks. 9 months. Because of the consolidation here and the length of it, I think it could happen in 3 to 6. It could be very, very violent and explosive. But here's the thing. If you're an investor in this area, whatever your attitude is, if you're bearish, if you're bullish, if you're neutral, if you're just kind of asleep, I'm trying to get you to watch this to wake up a little bit, or at least keep an eye open. Keep an eye open for this trigger, because once we see it, you would be a fool not to add to positions. It will be a significant confirmation. And if you wanted to wait for more than 1 monthly close above, so be it. You might lose a little bit here, but at least you know it's not a false move higher like we saw a little bit here. We saw it a little bit in, I think it was July of 2016. It popped above it. None of these closed above though. So I think based on what's going on, I will deploy a significant amount of capital that I want to on the first breakout, first closing monthly breakout of the $1,400 level. It's really $1,375, but I think for the sake of psychology and anything else in the markets to really put a nail in the coffin to doubt, it's going to have to breach 1,400 in that way. And it could happen very soon. It's 1330 right now, and we're not talking about a far move. I mean, it's about a 6% move, which for gold is very doable quickly. So moving on to the mining stocks, and hopefully you can understand what I'm doing here. This is just outlining this triangle pattern. And then so also just real quick, the other thing you'd want to watch out for is if this ended up extending this line through here to the top of the top resistance line. If it busted below there and it cracked and closed below that line for 2 months, I would be very concerned because, and that's also why I think this is going to happen soon, because we're dealing with an apex situation here very shortly. There's only so much more this is going to be able to consolidate until those two areas meet. Looks like 2 more months, maybe 3. We're coming to a conclusion, and it's going to come sooner than later, in my opinion. Now, moving on to the gold stocks, I'm going to first go to the, this is the monthly. Just want to make sure you're seeing this. I guess you're not. Let's see. Let's go to, let me actually save this real quick. Uploading, and there we go. Should be able to see it. So this is the monthly. We're going back again about 10 years. Actually, GDXJ only goes back about 8 years in terms of its existence. But you can see that up here, you know, we were looking at $140, $150 a share for that ETF. This is the GDXJ, the junior miners, which had gone and gotten beaten down all the way, you know, 90% by the time that the bull market ended in the first part of January 2016. Since that time, we've basically formed this perfect pennant situation on the monthly chart, also getting very close to the apex as well. So in the monthly chart, we've got higher lows. When we switch over, and this is just another confirmation that we are in this tightening channel, this tightening triangle pattern that is occurring. And when you get an apex, usually they resolve themselves one way or the other before you get to the end. There's a chance, and in some cases, they will extend a little further than the apex, but it is absolutely inevitable at that point that you're going to see it move one way or the other. And the breakout, because of the amount of consolidation and the length of which has occurred, I believe it's going to be very powerful. The first stop on GDXJ after it goes through that level, even though it's at 2454, is basically you're going to look at a move to 50. Maybe I've got that wrong. It's actually at, where are we today? Just want to make sure I have the numbers right. Could be 30. Yep, it's 3154. So 3154 to 50, you're not quite at a double, but you're a 75% to 80% move once that breakout occurs. Now let's look at the weekly chart, which I think looks very beautiful, except for we had a fake out here. We had a fake breakout just recently in 2018, and now we're back in this channel. And so you could have drawn a line sort of more towards the triangle. I decided to make it a little bit more flat here. But, you know, look at that upper resistance line. Again, we're staying right in there. We had, you know, looks like 2 closes above, and it rolled back down. So some people got frustrated, including myself, that we didn't quite see it go. But when you look at the weekly, you look at the monthly, you draw these patterns, the bottom line is that there is resolution coming one way or another. I'm 80 to 85 to 90% confident that the resolution is going to be up. If, however, it is down, if we see the gold price break down, the GDXJ price break down below its triangle pattern on a monthly basis, which would be over here, and we see it on the weekly and it falls below, really this would be the point, 2750 on GDXJ. If it does that, it's got a ways to go down, and we would be looking at basically a reset and saying, okay, we've got a while to go, and this might go retest the lows of 2016. But I just don't see it. I don't think that when you take everything going on together in the world, it's not likely. The likeliness at this point, especially due to this chart right here, the fact that we've broken that upper resistance line for months now and have closed and remained above it with higher and higher lows on the longest term chart that we can see, the odds are greatly in the favor of the bulls. And I wanted to put this video out to give you some visuals to say, listen, get ready. Get ready, because this has been a bit of a frustrating process. Anytime things heat up, you know, we end up either getting whacked right down or it rolls right over, you know, and so when you're hoping something's going to start running and it continually does not, it can be a bit discouraging. But I would say you want to reset your mind if this bad boy goes through here and realize there will be resistance here, but I don't think it's going to be that great. If we bust through here and close a couple few months above the 1400 level on gold, it's going to 1900. And that's a pretty substantial move. I mean, we're talking about somewhere in the ballpark there of, 40%. It's a big move in gold. The miners are going to triple in that type of an environment. They might go up 5x. Certain ones will certainly go up 5x. And my belief is ultimately this will be broken. In fact, with all of this consolidation and with all of this action that's been going on for 10 years, I believe that gold is set up to not only go back and retest its highs in less than 9 months once it breaks 1400, but it will not take even a year. It will take less than 6 months for it to consolidate over in this area. Let's just say it breaks out and hits somewhere in here, retest. We'll go and back and fill, and it's gone. And we're going to see gold trading to 3,000 plus before this thing is all over with. So I try to be balanced and a little bit cautious along the way, but I wanted to give you a glimpse of the long-term picture. I'm very bullish, and if we get a confirmation here soon, I'm going to be screaming from the mountaintops to get into action. And I think that depending on the amount of action that you take, that you have taken during the lows of the bear market and this last couple few years, and the action you're able to take right when we get that confirmation early on, can you put on some big positions or at least deploy enough capital to really bolster yourself? It's going to make a lot of difference in terms of your ultimate portfolio value and profits. Just don't be the guy or the lady that's getting involved here because you're asleep. Here, you'd still make a lot of money. Here, come on. We've got this opportunity here and the writing's on the wall. So get ready. Good times, I think, are very close. And let's see what